Hey everyone, James here on the Crypto Swiss channel. Buckle up, because one of the biggest banks on the planet just dropped a bombshell prediction. XRP's price could climb to $12.50. And no, this isn't some random blog or fly-by-night operation. We're talking about Standard Chartered, a global banking powerhouse managing $367 billion in assets, with 83,000 employees across 64 markets. Let that sink in. This isn't your average headline. Standard Chartered is a juggernaut in the financial world. Tired of fake gurus who claim to be expert traders but never trade live? I trade live on the second largest crypto exchange, where everything is transparent and results can't be faked. For over 440 days, I've consistently closed every month in profit. In the last 90 days alone, my followers have earned over $34,000 in profits with only 4% drawdown. Verified results, not empty claims. Want to see my verified stats? Click the first link in my profile and start copying my trades for free today. And now they're echoing what the XRP community has been saying for over a decade. Remember, this is the same community that's been championing XRP's potential long before many of us even knew it existed. When I heard this earlier today, I had to hit up X, formerly Twitter, to share my thoughts. Let me tell you, it feels surreal to see a multinational giant predict what once seemed impossible. The idea of XRP hitting $12.50? A few years ago, that kind of prediction felt like a pipe dream for so many reasons. Yet here we are, folks. The world is finally catching up to the vision and understanding of the XRP ecosystem. This is real. This is happening. What once seemed out of reach is now on the horizon. Stay tuned, because the crypto landscape just got a whole lot more interesting. Big banks are finally talking about crypto, and while Bitcoin gets some attention, XRP has had its own battle, thanks to the SEC's attack. But guess what? That chapter is closed. With the government no longer holding XRP back, it's catching the attention of some major players. And honestly, it just makes sense. I've said it before, and now it's clearer than ever. XRP is one of the original winners of the crypto world. Sadly, some folks won't realize it until it's way too late. But not you. If you're reading this in 2025, congratulations. You're ahead of 99% of the planet because less than 1% of people currently own XRP. Now, just so we're clear, I'm not a financial expert. This isn't financial advice, and you definitely shouldn't make investment decisions based on anything I say. I'm just a crypto enthusiast who loves chatting about this stuff on YouTube for fun. Okay, back to the exciting part. According to CoinDesk, there's a bold prediction from Standard Chartered. XRP could hit $12.50 before President Trump's term ends. While I've got some questions about their timeline and approach, it's an intriguing headline, and it's sparking a lot of conversation. This topic is covered early in the video, so let's dive in. Now, when it comes to the price predictions being discussed, none of it seems outrageous to me. In fact, I'd say some folks in the crypto space might argue these estimates are pretty conservative, but still, seeing a major bank project double-digit price action for XRP, that's wild. Back in 2017, when I first got into crypto, this was nothing more than a pipe dream, a what-if scenario we could only imagine. But here we are, and it's just more proof that we were right all along. All we've ever needed is time, for adoption to grow, for governments to loosen their grip, and for the market to evolve. It's becoming increasingly clear we're on the right side of history, and the momentum is only building. Now, here's what the report says. Standard Chartered predicts XRP could hit $12.50 before President Trump leaves office. Their projections include $5.50 by year's end, $8 by 2026, $10.40 by the end of 2027, and $12.50 by 2028. At the time of writing, XRP is trading at $1.93, up over 7%. Honestly, these numbers don't seem far-fetched. Most of us in the community see hitting those levels as more of an inevitability. It's just a matter of time. The part that really caught my attention, though, is how they're framing this. Are they intentionally skipping over market cycles? It almost feels deceptive if that's the case. Maybe it's a marketing tactic, but it does raise questions. Why ignore something as fundamental as market cycles? It's like they're leaving out a piece of the bigger picture, and it's got me wondering. They have to know about this. I mean, come on, right? These aren't clueless people. So now they're talking about XRP hitting $5.50 this year. Honestly, to me, that seems insanely conservative. Just my 2 cents here. I don't make price predictions, and I could be way off. But still, $5.50? Really? Unless this bull market doesn't get its final blow off top, which is possible. But if it does, XRP is going for the ride of its life. I genuinely believe it'll be one of the top performers when it happens. That's my take at least. But what gets me is how these predictions keep increasing year after year, like a slow build. And I'm sitting here thinking, why aren't they factoring in the possibility of a blow-off top followed by a huge pullback? Why not $12.50 at the peak this year, then a sharp correction? After that, maybe 3, 4, or 5 years later, XRP climbs back even higher. Why isn't anyone talking about this? It's what I'd expect based on crypto's cyclical nature. Still, it's exciting to see this coming from a multinational bank. This isn't some small operation, it's a giant in the financial world. I'm thrilled to see them acknowledging XRP, but let's dissect this a bit. Ignoring the cyclical nature of crypto doesn't make sense to me. Why wouldn't a major bank factor this into their analysis? Is there another motive? Something we're missing? Anyway, the piece goes on to mention that XRP soared six-fold after Trump's election win in November, partly due to hopes the SEC would drop its appeal against Ripple and potential approval of XRP exchange-traded funds. Interesting stuff, no doubt. But there's so much more to consider here. Let me pause for a moment to point out something significant. You'll notice as we go deeper into this discussion that their analysis aligns with key metrics we've been discussing in the XRP community for ages. And guess what? They've made it abundantly clear. Utility matters. Shocking, right? I've been saying this for years, long before I even started this YouTube channel. And it's still as true today as it ever was. Utility is what wins in the end. There's a reason XRP has consistently ranked in the top 10 cryptocurrencies by market cap. It works, plain and simple. Plus, being an early mover doesn't hurt. Now, back to the article. The bank notes that such gains are sustainable, partly due to leadership changes at the SEC, but more importantly, and here's a direct quote, because XRP is uniquely positioned at the heart of one of the fastest growing use cases for digital assets, facilitation of cross-border and cross-currency payments. Hallelujah. Institutions are finally waking up. This is one of the most blatantly obvious use cases for digital assets. It's why, after just a few days of researching XRP, I had my light bulb moment back in November 2017. I dove into crypto on a whim, fascinated by the promise of Bitcoin and its unique attributes. But XRP, it hit differently for me, like an epiphany. The Bitcoin crowd often claims their favorite cryptocurrency is here to stay forever, and honestly, I found their arguments pretty compelling. But what really convinced me that this entire asset class is permanent wasn't their reasoning. It was my own aha moment. It hit me when I realized there are business models that simply cannot exist without decentralized cryptocurrencies. Take XRP, for example. It's a decentralized cryptocurrency with real technological capabilities, an open market price, and all the right ingredients for utility. When I saw how XRP could function as a bridge currency, it clicked. The epiphany hit me like a lightning bolt. This tech enables things that traditional systems just can't. That's real value, completely separate from price, which means it's not going anywhere. From that moment, I was hooked. I dived in head first, spending hours every single day for months, absorbing every bit of information like a sponge. I'm sure many of you know that feeling, right? That moment when the light bulb goes off. Fast forward to today, and it's gratifying to see banks catching up to what we understood years ago. XRP is now uniquely positioned at the center of one of the fastest growing real-world use cases for digital assets. It's crystal clear. Take this quote, for instance, from Jeffrey Kendrick, head of digital assets research at Standard Chartered Bank. XRPL is similar to the main use case for stablecoins such as Tether, blockchain-enabled financial transactions that have traditionally been done through traditional finance institutions. This is the game changer. Blockchain technology like XRPL isn't just here to complement traditional banking. It's poised to replace parts of it altogether. Banks aren't disappearing anytime soon. That much is clear for a host of reasons I've covered in recent videos. But the financial landscape? Oh, it's shifting, and fast. Let's dive in. According to a new report, stablecoin transactions are projected to grow tenfold in just 4 years. That's huge. Why? Because the XRP ledger already supports RLUSD, a stablecoin that relies on XRP for every single transaction. That's how it's coded. XRP acts as the gas token powering these transactions and everything else tokenized on the XRP ledger. This unique role gives XRP a major edge. It's not going anywhere, folks. Adoption is only going up from here. Quick refresher, stablecoins, like those tied to the US dollar or gold, are essential to crypto markets. They're integral for international money transfers and play a huge role in moving funds across borders. Although someone at CoinDesk needs to proofread, come on people, too many in their piece. See student energy, am I right? Back to the good stuff. Ripple is doubling down on pushing the XRPL into the tokenization space. As a decentralized public blockchain designed for payments, XRPL is primed for this next wave of innovation. According to the bank, XRP is poised to keep pace with Bitcoin in terms of price appreciation, thanks to its unique strengths. But let's not mention this to the toxic Bitcoin maximalists. They're not exactly known for handling news like this gracefully. You know the type, the self-proclaimed gatekeepers of all things crypto. Picture them, huddled around a dumpster fire under a bridge, wearing Velcro shoes and charging passersby in Bitcoin just to cross. Of course, the transaction might take 24 hours to process and come with sky-high fees. These guys are the embodiment of knuckle-dragging troglodytes, clinging to outdated ideals with all the grace of a bull in a china shop. Now, back to XRP. Sure, some reports claim the XRP ledger has a couple of flaws, like a smaller developer community and limited value capture, but these so-called flaws are more than outweighed by its strengths, according to the same report. Let's break it down. The smaller number of developers, that's really just a reflection of XRPL's specialized design. It doesn't have layer 1 smart contract functionality like Ethereum. If that ever changes, expect developer numbers to soar. But even if it doesn't, does it matter? Not really. Why? Because XRP excels at one thing: payments. And here's the thing, just because XRP focuses specifically on payments doesn't mean it's flawed compared to other chains. Every blockchain has its purpose, and XRPL was built to do payments exceptionally well. Calling that a flaw is like criticizing a sports car for not being a truck. Different tools for different jobs, right? So let's give credit where it's due. XRP is built for speed, efficiency, and scalability in payments, and that's a winning formula. It's just the way things are, and it's intentional. The focus has always been on payments, not on attracting hordes of developers through smart contract functionality. Fewer developers? Sure, but that's not a flaw. It's by design. You can't call it a failure for not being something it was never meant to be. That's like biting into a pizza and complaining it doesn't taste like a taco. You wanted a taco? Then order a taco. It's absurd to criticize a solution for excelling at exactly what it was built for. Now let's talk value capture, because that's where things get interesting. Total value locked TVL on a chain, representing everything tokenized, from stablecoins like RLUSD to real-world assets, is rising. And no, this isn't just some narrative fluff, it's a measurable reality. As more real-world assets are tokenized, the value locked on the ledger grows. The more we lean into this direction, the more significant that number becomes. Here's an example. Remember Tron? Back in 2017, it was riding high, sitting in the top 10 cryptocurrencies by market cap. Then, like many, it fell off the list post-2018. But unlike most, Tron clawed its way back. Why? Its massive stablecoin ecosystem. At one point, it was the largest in the crypto space, and that high TVL played a huge role in its resurgence into the top 10. The takeaway? Value locked matters. And with RLUSD and real-world assets gaining momentum, it's clear we're just scratching the surface of what's possible. If RLUSD continues to gain traction, think about this. It didn't even exist 4 months ago. And now, when I checked recently, it ranked somewhere around 211 in market cap, out of tens of thousands of coins. That kind of rise is impressive, and as RLUSD grows, the total value locked will soar even higher. Combine that with the rapid tokenization of assets, and you're looking at massive value capture on the horizon. Now, to balance the hype, some challenges have been highlighted, but even the reports admit these are more than offset by strong tailwinds. Fair enough to point out, though I've got a couple critiques here and there. But honestly, even without all the recent developments, XRP shines on its own. It's phenomenal for payments. For over a decade, global investors have been putting their money where their mouths are, signaling loud and clear that XRP makes sense exactly as it is. It's held strong in the top 10 coins by market cap, even during the SEC's regulatory attacks in the US. That resilience speaks volumes. Globally, investors have essentially said, XRP works. We like what it does, and it deserves its spot. And they're right. There's a clear space in the ecosystem for what XRP brings to the table. It's not just about developers, or even the increasing value capture, which, let's be real, is going to skyrocket. XRP is proof that some solutions are simple, effective, and indispensable. What's even more exciting? Seeing a colossal bank, one of the largest in the world, backing these kinds of innovations. This isn't some small institution. This is a powerhouse. It's a dream come true, another layer of vindication. We were right all along. And as time passes, the rest of the world will catch up to just how right we've been. One final note, I'm not a financial advisor. Don't make buying or selling decisions based on what I say. That would be an incredibly bad idea.